Good morning, everybody. Hey, welcome to the last Friday, the last trading day of May 2020. It's been the last month or so has not been bad, but hey, as we continue to look back and where we've been and where we're going, we still have a long way to go. The market was ended up down a little bit yesterday. Will it rebound today? That's the big question. How will it end the week? How will it end the month as we get ready to head into June? Hey, I'm glad you joined us today. Stay tuned. We will join Dave next step.
840. 49. Let's check in and find out how Wall Street's treating your money, shall we? Downtown Sebring to the offices of Statler Financial Services we go, where Phillip Statler is standing by. Phillip, it's always fun when you and I both get together before we go on the air, get an economic number out, and both of us say, I don't know whether that's good or bad. And we had one of those inflation numbers today where I don't know whether it's good news or bad news. How about you?
Well, I agree on that one, the PCE, but I defer to the guy that's at least got some economic degree of some kind in his background versus me, the accountant.
Yeah, and this guy with the econ major has no idea whether to call a disappointment good or not. Personal consumption expenditure inflation. It's probably one of the more useful numbers that come out of the government. They said last month that our overall personal consumption inflation rate was down by 0.5%. The market expected a little smaller drop than that. I'm kind of figuring a lack of demand means a drop in prices, but none of that is much of a surprise, even if it was a shock, right?
Exactly. So not a big miss either way. The PCE was down minus 0.3 compared to the minus 0.5. That's not bad at all. But what really caught me off guard though was a personal spending number, and you and I kind of laughed about that. But the personal spending number. The personal income number. I'm thinking about the personal income number came in at like a positive 10.5%. That means personal income rose last month versus an expected 5.4% decline. That's a big swing of over 15%.
That's absolutely monstrous. Yeah, the federal government report this morning says that personal income in this country during the month of April actually rose by 10.5%. And you and I got to assume a big chunk of that is all that money the federal government poured into our checkbooks.
It's got to be, Dave. I can't think of anything else. With the unemployment the rate it is, you and I would expect income to have fallen, but obviously they're including unemployment benefits as income, which it is. So that has definitely boosted income. And those people, let's face it, a lot of those folks that are getting unemployment are getting more money on unemployment than they would if they were working. And that's been a big issue that I've seen on the news here the last couple of days, is that it's causing people not to go back to work, which is a problem.
It is a challenge, but I got into a discussion on one of my Facebook groups on that too. All right, let's take the restaurants, for instance, that reopened. There were a couple of them that I know that had to delay their opening by a couple of days because they were calling around and they had trouble finding their service people, dishwashers, line chefs that were willing to go back to work right away because they got their unemployment through it. It was actually paying better than some of their choices. Well, those restaurants were only able to open up at 25%, now 50% capacity. It's kind of taking some of the strain off anyway for folks that are, okay, fine, I'll let somebody else take the job for the moment. And on these lower end scales where folks are adjusted to the point for living on a number that unemployment number is capable of working for, it actually is taking some of the crisis level off for folks who really do need to go back to work. So I'm kind of sort of on the short term seeing that as a good thing. 6 months down the road, if we still have that problem, whoa, Katie barred the door, I'm going to change my mind.
Well, and unless something does change and the Congress passes something different, end of July, that extra $600 that's coming from the federal government will stop.
Exactly, and at that point in time, the incentivization to go back to work comes back. So, it's one of those things that you look at, and it's going to make some folks shake their head, bang their head against the wall, and have a hissy fit. In the case of Facebook groups, I'm kind of saying right now, while there isn't as much demand for returning to work, having a few folks saying, okay, fine, I'm cool with that, I'll stay out a little longer, might actually be a good thing to cushion the blow.
Oh, that's true. Hey, we had some other numbers come out. I just saw this one hit my news ticker. U.S. savings rate hit a record 33% as folks are stockpiling cash, right, as much as they can.
You know, given something that you brought up yesterday, that we've got that PPP, the Payroll Protection Program, expiring in June and the potential for more layoffs coming on, that probably is smart on behalf of the American consumer, isn't it?
Absolutely. Now, one area that, personal spending came out too, Dave. And so personal spending was expected to fall by almost 13%. And it did much better than that. It only fell by 6.9%. Now, so people are still spending, not as much, obviously, because it's down, but that's because retail stores aren't open. So that was kind of an interesting number, too, for us.
Yeah, the fact that the number was not as bad as expected, we're almost getting to that point, is a crummy number as crummy as they expected? No, this one wasn't by a wide margin, so it's probably good for the consumer economy as a whole.
I think so. I mean, I think that means that, we've kind of got this, yes, we're pulling back. We're not spending as much and it's decreased, but we're saving money. So I think both those things, to a certain degree, are good.
Yeah, it sounds like a sane economic picture at the moment, given the circumstances that we're living under. Talking about that increase in personal income and not as large a decrease in personal spending as we expected kind of leads us into some reports. And I know you got a slew of retailers that put out their quarterly reports this morning, Phillip.
We did. I mean, it's like the majority of what I see today. So let's start off with the discounters. Big Lots. Big Lots came in with earnings of $1.26. They were expected only to make about 40 cents a share. So a big beat for Big Lots. And here's a big number. Big Lots said their same-store sales jumped by 10.3% versus the expected 1%. And to make it even better, Dave, they expect a similar jump in same-store sales this quarter, current quarter. So Big Lots getting some benefit and doing well right now. And they probably don't show up in your big winners list, but they should. They're up 12.8, actually just jumped to 13.7%. They're up.
Crud, that is a big jump. I guess Big Lots kind of surprises me more than some of the other discounters because I don't think of them as a sundry store.
That's true. And they will actually open at a new 52-week high at $41.70 a share right now.
Wow. I'm going to assume that's not the that's not the picture of all the other retailers you've got.
No, it's not. So let's go to the wholesale chain guys at Costco. Costco actually missed by 6 cents a share. Revenue, though, was slightly above what was expected. They did have an event that was something that hadn't happened in a long time. Their same-store sales actually fell in the month of April. They say the first time in over a decade. They can't put as many people in the store because of all the social distancing. So, and you had that big stockpile surge in March where everybody was getting to the store and stockpiling all that toilet paper.
Yeah, we note that they were running Costco dry even in March. That's right.
So they're trading down 1.8% this morning.
All right.
Let's go to kind of a high-end store now, Nordstrom's. Nordstrom's lost 3 times what was expected. Yeah, they lost at $3.33 a share, a big deal. Obviously, they missed on revenue. Also, their sales were down 40% during the last quarter. They're down 2.8%. they're still not. I mean, they're 52-week. They're about $5 away from their 52-week low right now. So they're hanging in there from that standpoint.
I guess I'm not.
Go ahead.
Folks don't think about them as being a drop-by and pickup place, so consequently close their stores. They're in a world of hurt, aren't they?
That's true. Yeah, they are. And this next one, I think Williams and Simona, I kind of consider that a high-end store too, right? I mean, every time I go in there, I don't see anything cheap. That's for sure. But they beat by 3 cents a share. Revenue was above the forecast. They had a big surge in their online sales and with their household essential stuff. So that was a big help from them. They're up almost 9.5% this morning, and they too will open at a new 52-week high at almost $80 a share.
Cool. There are some good news stories out there this morning.
There are.
One or two more.
All right, so let's look at Ulta Beauty Salon. We always talk about them and kind of make fun of them, but they lost more than expected. They lost $1.39 a share. They were actually expected to make a profit of 48 cents a share. So a big miss for Ulta, and obviously the revenue missed too. Same store sales sank 35%. And so they're and I don't get this, Dave. They're actually about even right now. They're not. They're up 0.25%. So that's one of those cases where I just don't. It doesn't make sense.
I guess my biggest surprise is that anybody expected Ulta to be in positive cash flow territory during the last month and a half, 2 months. About the last thing I could imagine is having a cute chick smear makeup on my face.
Given all this stuff.
I'm putting it bluntly, but that kind of goes through my mind. It just strikes me as a lifestyle store that probably would be hit hard by this.
Exactly. It really does. You're right. Nobody wants you touching them. Hey, let's finish up with Dell Technologies, Dell Computers. They actually came in ahead of schedule. They came at $1.34 a share versus 92 cents a share, did well. They benefited because everybody had to work from home. So businesses were out buying workstations for their employees to work from home for. So that was a benefit to those guys. They're up 6% this morning.
Wowzer, we got our share. We got a Dell box in yesterday to replace one that blew up. Setting the table this morning, we had an off day on Wall Street yesterday. Almost all of it was after 2:30 or so in the afternoon. Combination of profit taking and people getting a big case of the jitters over China's clampdown on Hong Kong, and the president having a news conference today to tell us what he plans on doing about it. Dow was down by a little over 0.5%, NASDAQ by almost 0.5%, and the Standard & Poor's down by a little under 0.25%. It wasn't a Armageddon-level sell-off, but was red ink. Looks like the red ink is continuing a little this morning. Phillip, how we doing 45 minutes early?
For the most part, you're right. We are mostly in green ink. We do have an exception, being the NASDAQ. Well, let me take that back, Dave. Now everybody's in the red, so that's how close it was for the NASDAQ. So NASDAQ's bouncing between red and green, basically even at this point. However, the other two not so fortunate. We've got the S&P 500 down a little over 0.4, which is a little over $13 down. The Dow's down $165, which is about 0.6%. If we look on the commodity side, we've got, gold and silver both bouncing high. We've got silver up 1.75% to $18.28 an ounce. We've got gold up 1%. And then that black stuff, that crude oil stuff, is down 2.3% to $32.91 a barrel, which is about where it was yesterday when we started the day.
I was going to say that looks like it kind of is a recovery from yesterday more than anything else. Overseas markets, Hong Kong is just getting hammered this morning. They're down by the better part of 1% at the end of the day. Japan off by a tinge, mostly sympathy on that front. Europe has the jitters over our relationship with China, so they're trading down midway through their day as well. Phillip, profit taking is stuff that the big guys can do because they can time things. The rest of us just got to make sure we control risk in our retirement portfolio. How do I get a hold of you for advice on that?
They have to schedule their no obligation at all, risk-free return. What is their financial X-ray look like? How much risk do they have in their current portfolio? Give us a call, 863-382-0037. Follow us on Facebook. All you have to do is search under Statler Financial Services. We'll pop right up, and you will get a rebroadcast of this every day in case you miss us one day. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And you and me back in the flesh again right here on Monday morning. Phillip, thank you so much, and we'll see you then. Have a great weekend.
All right, man. You too.
Thanks. Take care. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember that first paycheck?
Hey, folks, again, I want to thank you for joining us today. I hope that you have a great weekend, get some downtime, enjoy time with family. But remember, be safe, socially distancing. The market's seen a run up. We're seeing a down day today. Is your risk okay? Give me a call to find out. Hey, take care. I'll talk to you on Monday.